We're here today for the ADIPEC Virtual Energy Dialogue, and I'm delighted to be joined by Musabbeh Al Kaabi, the petrochemical and petroleum CEO at Mubadala Investment. Musabbeh, good to be with you. Thanks for joining us.
Thank you, Jason, and thanks for hosting me.
So we chatted last year at the ADIPEC conference. We're here again for a continuation of this conversation. Just if you could start, it's been such a remarkable year in so many ways since I saw you last in Abu Dhabi. Talk a little bit, especially for listeners who may be less familiar with Mubadala, about what the company portfolio and priorities are now, but especially how COVID-19 has impacted the company, what have been the biggest challenges for you, and how you've coped with that as a leader.
Yeah, well, obviously, Jason, we're experiencing something unprecedented, something we haven't seen before. So predicting the market is a big challenge, and we're doing what other investors are doing. We're trying to adjust our activities to cope with a new reality. COVID-19 has disrupted every business sectors we're investing in. So our job currently is to primarily weather the storm, try to also steer our strategy in a way that we position the company for the next phase of its growth. Mubadala, as you mentioned earlier, it's a sovereign wealth fund, asset under management of $229 billion. We're active in many sectors, so not only in the energy space, but in the technology, life sciences, pharmaceuticals, information technology, and almost 15 different sectors. And yes, I think COVID-19 proved to be very challenging to everyone globally, and we are no exception. But it is hopefully creating opportunities and a different perspective on the investment environment going forward.
What's the impact been on UAE and on Abu Dhabi, which obviously depends heavily on oil revenue? We've seen this huge price collapse. How do things feel there? How does the economy feel right now?
Yeah, well, it is being impacted like everyone else in the world. But the good thing about what the UAE is about is we started a vision long time ago, almost 2008, to diversify the economy away from oil and gas. We are still on that journey going forward, but COVID-19 and the previous drop in the oil prices back in 2014-15, I would say put an acceleration mode into that vision. So the government has been extremely laser focused on pushing that agenda going forward and trying to diversify the economy. So overall, when you think about the UAE and comparing the UAE with the neighboring and in the region, I think we're satisfied with the progress done, and we're in that journey, and we're becoming less and less volatile and more resilient when it comes to the commodity price, especially oil prices. But yes, there is a vision, and the government is fully behind that vision and very committed to help. Mubadala is also part of that vision, and we're trying to, wherever possible, try to push that agenda going forward. The UAE in general also dealt very professionally with the COVID-19 situation. We are one of the highest, or the highest, testing per capita globally. So more than 50% of the population has been tested. We're putting the right protocols in place to minimize and flatten the curve, try to also drop it as much as possible. So overall, I'm glad to see the UAE ranked one of the top countries globally to deal with the COVID-19. From the health point of view to the economic and the measures put in place to eradicate and minimize the negative impact of COVID-19. We are forward-looking, and hopefully next year we will see more and more initiatives, and that proved to be, I would say that the government vision has proved to be very efficient and practical.
When do you, in terms of the outlook, when do you think oil demand reaches pre-COVID levels? And do you think the result of COVID-19 will be to permanently change the outlook for oil demand? Are there certain patterns to the way we work and travel, air travel and the rest, that you think will not look the same going forward as they did in the past?
Yeah, back in December 2019, if you recall, I would say oil demand globally was around 100 million barrel of oil per day. We've seen a significant drop in March, April, almost 30% drop in suddenly in the oil demand globally. So that led OPEC Plus to put the right plan in place to stabilize the market. Currently, we're very happy to see the oil demand going back to the levels of, let's say, 90s. It's a number between probably 90 to 93 now. And but there are segments, Jason, of the demand would take longer than expected to recover. The one is the airlines sector and the jet fuel. So the jet fuel will probably take 2 to 3 years to go back to the pre-COVID-19 levels. But the other sectors of the demand we're satisfied that we've seen a significant recovery back to almost pre-COVID-19 levels. So yes, the recovery has been, I would say, an acceptable level of recovery. We're expecting more recovery to come next year. But for the jet fuel, I think it will take maybe 2 to 3 years to go back to COVID-19. Now, the big question mark, what is the long-term impact of COVID-19 on the oil demand? Well, there is no doubt that it created a disruption. I think the way we see the world post-COVID-19 will be totally different. I'm confident that there will be less traveling, less, certain sectors in the economy will have less activities, which will translate probably into a lower demand in that particular sector. But let's project to the year 2030, 2040. We still think that there will be an acceptable level of growth in the oil demand, potentially up to 2030, and where we anticipate a peak demand or peak global demand. Yes,
you anticipate peak demand around 2030. Is that what you?
We're saying that based on the latest projections, it's around 2030. Some analysts probably push it forward, some push it earlier. So that's the consensus in the industry now, is that we may see a peak oil demand sometime along in the next 10 years plus or minus. So to summarize, I think for COVID-19, we're expecting a disruption, major disruption in the demand in the short term. We've already seen it in 2020. We're expecting to see also the continuation of that disruption in 2021. But if you project your horizon to 10 years down the road, I think we will go back to an acceptable level of growth and potentially taking us to the peak demand around 2030.
So in that scenario, it takes 2 or 3 years to recover, but then demand is still growing. We haven't seen peak demand yet. If that's correct, the response to what we've seen in COVID-19, which is shut-ins globally that may cause some degree of permanent loss or damage, major capex cutbacks, and obviously many majors are reporting historically large losses. The outlook for shale growth in the years ahead is lower today than people would have thought a year ago, in part because capital is harder to get, and also some of the social pressures, which I want to come to and ask you about. Do you think there's going to be, are we setting ourselves up for an underinvestment cycle? Do you think we're not investing enough, given what you just said about the demand outlook?
Yeah, well, I think in 2014 and 15, we had similar argument, Jason, if you recall. And we thought, underinvestment will translate into supply shortfalls in the future. This time, I see it differently. For the reasons you mentioned, there is a pressure on big IOCs. There is a pressure from the investor community. There is government policies, climate change. So I think if you put these in perspective, I doubt that there will be a massive investment in the upstream sector, especially from IOCs going forward, which will create space for national oil companies and privately owned companies to play in that space. So yes, there is probably, this time is different because of the reasons we mentioned: climate change, ESG consideration, government policies that put pressure on the conventional players to expand on the upstream. So I think, yes, to summarize it, I think there will be episodes in the near future where we see a potential disruption in the supply. And the emerging winners would be the likes of national oil companies and privately owned companies. They can play in that space.
I want to ask you also about sort of the outlook you see for gas and petrochemicals, which is important to Mubadala. But since you brought up the ESG pressures and driven by the fact that, trying to come anywhere close to the ambitious climate targets in the Paris Agreement would take pretty historic shifts between now and 2050. And we've seen some of the prominent announcements from big oil firms like BP, Equinor, Shell to be net zero by 2050, to transition away over time from being oil firms. Obviously, BP just said it was going to ramp up its clean energy investment, let its oil production decline. What do you make of these announcements from big oil? Are they real? What impact do you think they have for the industry? Is that a direction you could see companies like Mubadala and others in the region following? Some of the state-owned enterprises?
Well, I think based on what we see, let's take things in perspective. So let's project the energy demand by 2030 or 2040 or 2050. In these scenarios, Jason, we always see that the oil and gas will remain, I would say, a significant part of the future energy demand. So which means we have a responsibility to supply the world with the required energy to meet the demand in the future. I think there is a pressure on the IOCs. Investors are also putting more and more pressure on them to address the ESG and climate change more aggressively than what we've seen historically. I think it is the responsibility of the IOCs, of the producers, including national oil companies, to try to strike the right balance between these factors. And one area that they can play more aggressively on is the deployment of technology, the decarbonization of the operation of the production, and ultimately, hopefully, deploying technologies that will minimize or eradicate the emission. I keep telling the team here in Abu Dhabi is that, well, oil and gas is not bad, emission is bad. So let's do something about emission. And there are some emerging technology that could help national oil companies and IOCs to address that issue. I think what industry did in the last 20 plus years was they put themselves in a defensive mode. And if time goes back, I think they should have probably embraced these trends and play more proactive role by deploying and promoting technologies that minimize the carbon footprint of their production and their operation, and try to come up with innovative technologies to address this issue. By the way, I see probably a similar trend in the downstream with the petrochemicals. And I think with the petrochemicals, it's very important and critical for the petrochemical players to be proactive, try to address the plastic waste issue and not be in a state of denial. And we see a strong movement within the industry to tackle the plastic waste. So I'm optimistic that the technology will help the industry as well to address these big headwinds and big challenges. And I remain optimistic that we will see some emerging technologies that address these issues.
Yeah, I mean, you're certainly right that the outlook today, the baseline case would be continued growth in oil demand, at least in our modeling, for some time to come. Those outlooks are not consistent with then meeting the kind of temperature stabilization targets that people have for 2050. And so the question, I guess, is whether you see Europe passing the Green Deal recently. South Korea, I think, just became the first country in East Asia to pledge to be net zero by 2050. We'll see what happens in my own country in November. Vice President Biden's climate plan now has carbon-free electricity by 2035. These are hard to achieve. These are very ambitious. But do you see a trend of rising policy ambition and more policies that try to reduce emissions that meaningfully could change that outlook? And then actually the outlook for oil and gas might look a little bit different. And then how does a company like Mubadala, prepare to be resilient to that?
Well, I think you're right, Jason. We see many government policies around the world trying to push the agenda of decarbonization stronger. Trying to have a vision, and that if that vision is practical or not is, another debate. But let's monitor two, trends. One of them is the government policies, and as you mentioned, now even Asian players who historically been heavily dependent on oil and gas are joining the club and trying to put the right vision, right government policies in place to decarbonize their economic activities. So government policy is one. The other one is the technology. Let's not underestimate the impact of technology. So the technology would play probably two key roles. One of them is empowering the green economy by introducing the introduction of EVs, electrification of the transportation sector. That's one trend that no one is unstoppable. It's going in the right direction, but again, starting from very low pace. The other technology that I am hopefully and remain optimistic about is technologies that will enable us to continue producing the natural resources, yet with the minimum possible carbon footprint. And there are, many available technologies like carbon capture, putting more efficiencies, eliminating flares in the operation. So all these initiatives should provide, I think, the right framework to deal with the climate change, agenda. Now let's zoom into Mubadala. In Mubadala, we've been a responsible investor. We, invested in renewable energy very long time ago, I would say, especially in the region, with the Master, initiative at that time. And we're seeing Master becoming a global, I would say, player in the renewable energy. So yes, we invested in oil and gas, but equally we also put big efforts and commitment into the sustainability and the renewable agenda. And we are very proud to build the very strong, clean energy business within our portfolio. We will remain very active investor in that space, and we see more growth in the future. So as Mubadala, as we see this energy transition going forward, we're adjusting our strategy. And remember, Jason, we're an investor, and an investor will think of what the future will look like, and how can I make an acceptable financial return on these mega trends happening to the world. So yes, we will. We've been a responsible investor. We will continue to be a responsible investor, and we have invested significantly in all sources of energy, but particularly we were very pioneer when it comes to the renewable energy.
And as you said in the beginning, you're an investor not only in oil, gas, petrochemicals, but also technology. And I always enjoy our conversations because I know you think a lot about how technology might change the energy space moving forward in terms of production and in terms of decarbonization. So let me ask you about a couple of those. Hydrogen. Your neighbor, Saudi Arabia and Air Products made a big splash recently with a huge new green hydrogen project, renewables to make ammonia as shipping fuel. How do you see the evolving future of hydrogen, ammonia? Is this going to be a major part of the chemicals portfolio?
Yeah, well, Mubadala acknowledged this. We identified these trends, I would say, a few years back. So hydrogen, we recently joined the Hydrogen Council, and we're looking forward to have a very interesting and constructive discussion with them. So yes, hydrogen is attracting all the spotlights at the moment. And we think it addressed some of the inherited issues with the conventional renewable energy, being solar or wind. What makes it very interesting is the ability to generate clean energy at very low cost. So drop in the solar energy, the wind energy recently is enabling hydrogen to expand more and more. You mentioned the recent announcement in Saudi Arabia. It's an interesting concept. It is, I'm sure, there is an investment and strategic reason behind it. And yeah, I think it's a very interesting space. We're currently updating our view on the latest number we've seen, and we're trying to, align our strategy to put Mubadala on the right track when it comes to these emerging energy trends.
And do you have thoughts about sort of whether we're going to see this really play out in blue hydrogen, gas reformation with carbon capture, or in green hydrogen, electrolysis?
Yeah, Jason, I would say both. And sometimes I tell my team here in Abu Dhabi, I say, you know what, hydrogen is very close to us. And historically, we've been working on hydrocarbon. So let's just for a moment remove the carbon and keep the hydrogen, and let's explore that space. It is, the region is blessed with significant reserve in the oil and also on the natural gas. So yes, I think the concept of carbon capture, blue hydrogen would make sense, given the fact that the region is blessed with huge reserves in natural resources. It is interesting also to see that the technology is advancing. I remember we had similar discussion around the solar. If you recall, 10 years back, solar cost or electricity or power generation from solar was, I would say, high and prohibitively high in some places in the world. But with the current trend, you see it becoming so, I would say, competitive with the other sources. So I'm optimistic also to see that the technology in the hydrogen space will follow the similar trend, and the technology will enable the hydrogen to play more role in the future energy demand and production.
And what do you see as the outlook for carbon capture technology? You've mentioned it a few times. It is real. There are projects around the world today. It is expensive. Do you see that coming down in cost enough to be a viable decarbonization option for large energy companies?
I think it might become, in the future, that we might see a future where carbon capture become a necessity, not an optional, because of the social pressure on producers. And definitely the technology also will help in dropping the cost of carbon capture. So yes, I think with the trends we see in the industry, there is a possibility that we see carbon capture becoming a mandatory and not an optional option for the producers.
Do you think, I mean, this may obviously looks different if you're at Mubadala or ADNOC than maybe if you're at Exxon, Chevron, or an independent in the Permian, but these social pressures, the ESG pressures that you have talked about, what impact do you think they will have on access to capital for some of the large energy companies, and what does that mean for investment moving forward?
Yeah, I think definitely the ESG is becoming a hot topic now. So the financial institutions are debating, the impact of ESG on their activities going forward. The IOCs, some of them are under pressure as well. So I think we will see more and more ESG consideration in any activity we do in the economy. Of course, the pressure on the publicly traded companies like the IOCs would be much higher and much bigger than the pressure we see on national oil companies. So the national oil companies will acknowledge the ESG, will put the efforts to minimize the carbon footprint, and will try to push for new technology that will minimize the CO2. I think the situation with IOCs would be slightly different because there will be more and more pressure from the investor and community for them to take ESG, and put the right framework around ESG and try to do things in ESG compliant going forward.
And you mentioned petrochemicals a few times, which is an important area of investment and expansion for UAE and for Mubadala. If you look at the projections from, say, the International Energy Agency, it is the largest source of demand growth for oil. Yeah. But as you mentioned, there is also a lot of concern and backlash to plastic waste and pollution, what do you see as the outlook for global expansion of petrochemicals?
Yeah, I remain very optimistic when it comes to the petrochemical. I think the demand looks robust going forward, and it will also enable the parts of the decarbonization future and the artificial intelligence, the industrial revolution 4.0 to be realized. However, there is headwind, and we know that the plastic waste is a big issue. And I think it's very critical, very important for the petrochemical producers to acknowledge that, embrace all the policies and procedures to eradicate the plastic waste issue. When it comes to the plastic waste, Jason, it's slightly, I would say dramatically different than the climate change, because plastic waste is a human behavior. So if you improve or put the right policies or guidelines around using plastic, I think we have the potential to eradicate that risk. Mubadala and the companies we invest in are very committed to push the agenda on circular economy and plastic waste also removal. So we're very active in different fronts to tackle that issue. I remain optimistic because I think, or I believe, the industry will push more and more into circular economy, plastic recycling, and putting the right efforts to clean, some of the areas where we see a significant plastic waste, contamination.
Yeah, we certainly need more recycling and better behavior. I think there probably will be more pressure also on single-use plastics and finding alternatives for those. So I guess the question is, how much does that dent the outlook for petrochemical demand?
Yeah, when you look at the typical, petrochemical companies, especially polyethylene, the single-use plastic contributes small portion of their total production. But there is a strong drive and move within the players to focus more on the other applications for plastics and try to minimize or completely remove the single-use plastic in their portfolio. I see that also the agenda for circular economy is moving forward through our exposure in Europe and also in North America. It is becoming a hot debate, a hot topic, I'm sure, at many petrochemical board meetings. And, I remain optimistic because I see that there is a genuine and strong commitment from the producers, petrochemical producers, to tackle this issue and put the right, plan in place.
Yeah, I think we just saw Dow Chemical come out with a plan for how they're going to try to decarbonize the sector by 2050. But the point you just made a minute ago is an important one that I think is often not well understood. There's a lot of focus on single-use plastic waste like plastic bags and straws and other things, and we should, of course, reduce those. But those actually are not the primary drivers of the growth in petrochemical demand in terms of how petrochemicals tend to get used. This relates also to what I want to ask you about the outlook for gas markets globally and for gas demand. The IEA projects industrial consumption of gas for chemical feedstocks to increase quite rapidly, I think around a 3.5% annual growth rate, thanks to new fertilizer and methanol projects and such. What's your view of the gas to chemical sector moving forward?
Yeah, I think the natural gas in particular, we think it's the, when you look at the growth in the energy sources going forward, renewable energy definitely is enjoying the highest rate of growth. Next to it is the natural gas. And the natural gas is, the beauty of it, it's the minimum carbon footprint among the fossil fuel, sources. So, yeah, we remain optimistic about the future of natural gas. Currently, there is an oversupply definitely in the global market. If you look at Mubadala Petroleum, the upstream arm of Mubadala, we're gas weighted. So we acknowledge the importance of gas, and so we have big position in Southeast Asia. We have also a big position in East Mediterranean. And, that reflects the strong belief that gas will play a great role in meeting, I would say, the future energy demand, while also the source of energy with an acceptable level of carbon or CO2 emission. As you mentioned, I think for petrochemicals, if you look at the U.S. Industrial activities, after the shale revolution, there is a theme called reindustrialization in the U.S. And I would say a significant part of all the industrial activities happened in the petrochemical and the shale, activities. So it enabled and positioned North America as a leading and cost-effective, I would say, producer of polyethylene and petrochemical products globally. And we see the trend happening in elsewhere in the world. But yes, I mean, it's a remarkable story what happened to the petrochemical and especially in North America, provided that the environment and the availability of natural gas enabled that to happen. So to summarize, I think the natural gas will play a role in meeting the future energy demand and also meeting the petrochemical industrial demand in the future.
Yeah, as you said, Mubadala is a strong gas player. I think the direct role in LNG has been more modest. Is that an area of focus? Do you see that as an area of expansion for Mubadala?
We made, we've been monitoring the space. We evaluated many projects globally. I think you need to put things in perspective. So with the current projection on the energy demand going forward, we definitely, as I mentioned earlier, we put more weight on the renewable energy. We also acknowledge that natural gas will play a role, but sometimes it's really a challenge to find the right project that meets an investment criteria and attracting the right type of returns that you're expecting to generate. We have evaluated the space. We put some investment in the LNG, and we continue monitoring what's going to happen in the next few years. It's very interesting space, and the world will need more and more LNG in the future, but also other sources of energy. So I think the LNG, there are big players in the market. I'm truly impressed also with the U.S. becoming one of the leading exporters of LNG globally, and thanks again to the shale revolution. Russia as well is becoming and emerging as an LNG powerhouse, and historically also we've seen other regions like Australia and Africa might become also a player in the LNG space. So for a company like Mubadala, we'll look at these projects as long as they meet certain investment criteria. We will take our decision accordingly. But it's an interesting space to monitor.
I think the U.S. is one of those places you've sort of dipped your toe in the water. Tell me if I'm right. I think you have an initial interest in next decade. Do you think U.S. LNG sort of stacks up favorably compared to some of those other opportunities, or is it going to be challenging to see any new investment in U.S. LNG?
No, I still maintain the same view. I mean, you see, this COVID-19 is like a high-frequency event, hopefully in the trend going forward. So look at the U.S. There is an ample supply of natural gas, and the largest gas producer globally. Shale, of course, enabled that position. The infrastructure is available, and there are many success stories with the LNG in the U.S. So there are many already operating projects that are making, I would say, a strong or additional supply to the LNG market globally. And if we get COVID-19 behind us, I think it's going to be interesting to see that space one more time, and future LNG prices as a result of demand. So it's a combination of parameters, and I still think that the U.S. is an interesting space to monitor, especially in the natural gas and LNG.
Domestically, you have a large share of the market via the Dolphin pipeline, natural gas pipeline, and we've seen in the UAE the start of nuclear power now, a lot more solar power. What impact does that have on the changing domestic market for the fuel mix for electricity generation?
Well, I think it reflects also the conviction of the government that they are fully behind a vision and strategy that was presented earlier, a few years back, by 2050 to have 50% of the energy demand in the UAE, or power demand in the UAE, green, coming from green sources. So nuclear will play a major part of that, but also the solar and renewable energy. And 50% remaining is from natural gas. So with these, I think it's creating a new dynamics, a new landscape. Natural gas will continue to play a big role in the industry and in the power generation for many years to come. So yes, it's a reflection, Jason, of the government vision to embrace the new energy trends and become, I would say, less dependent on natural gas, because 10 years back, we're almost 100% relying on natural gas for power generation. Going forward, I think strategically it's important and critical to diversify the energy sources and, have a mix of sources in your energy supply.
I mentioned a minute ago, just in closing, we're almost out of time, but I know you watch technology trends very carefully. So what are you most excited about? What do you see coming around the corner that maybe we're not talking as much today about, but we will be in a few years, in terms of how technology will impact the energy sector, whether it's decarbonization technologies or things that affect demand in transportation and autonomous vehicles and the rest? But what do you see, or artificial intelligence and machine learning technologies? What are you excited about in the technology space?
Well, it's a big space to talk about, definitely, and even the artificial intelligence term is very widely used. But I think if I would rank 2 or 3 of these technologies, I would say artificial intelligence is becoming at the top. And why I'm saying this, because even in our industry, the oil and gas industry is a labor-intensive industry. Either we like it or we don't. And I see a space that we could automate many of the operation and the facilities we operate, and see an automated operation and production in the future with a minimum human interaction. That would be, I would say, a future that I possibly see in the horizon. The likes of artificial intelligence will make a big role in enabling that vision. The other technology, the technology related to, I would say, energy going forward, the energy transition. So in the energy transition, of course, we've been a heavy investor in the renewable energy. But if there is something that could potentially accelerate that energy disruption, I would say hydrogen. Hydrogen in the next 10 years, if there is the right commitment, right technology deployment in that space, we might see hydrogen playing a bigger role in fulfilling the future energy demand for energy.
Well, we'll watch the space carefully and hopefully have the chance to talk with you many more times to help us understand how it's all evolving. Musabbeh Al Kaabi, I know how much you have going on, and you've been very generous with your time. So thank you for spending time with us on ADIPEC Energy Dialogues. I'm sorry we couldn't do it in person, but hopefully we'll see you in Abu Dhabi or maybe at Columbia University in New York very soon, and see you virtually at the ADIPEC Virtual Conference in November. Good to see you again. Thank you for being with us.
Thank you, Jason, and it's truly an honor again to be part of ADIPEC, and looking forward for the interesting conversation around ADIPEC coming up. So thanks a lot.
Thank you.